What's going on, guys? Welcome to episode 1 of the Beginner's Guide to Futures Trading series that I'm going to be doing. Today I'm going to go over the absolute basics. So if you've never opened the charts before, you don't even know which website to go to, if this stuff in front of me right here looks like a foreign language to you, you are in the right spot because I was in your position not that long ago. And I want to be someone that can hold your hand through all of this. I want to show you the basics. I want to get into the complicated stuff of my strategy. But today's video is going to be all about the absolute basics that you need to know to get started. So if you're already a little familiar with futures trading and some of the base concepts, go ahead and skip to episode 2. We're going to get into more of the in-depth stuff. But if you are brand new, you're in the right spot. I'm excited to get going with you guys. And yeah, let's get into it. So if you guys are anything like me, the first time I opened up TradingView, I was beyond confused. And it was like looking at a foreign language for the first time. So we're going to go ahead and erase that confusion. By the end of this video, things should be a lot more clear. And we're going to start by cleaning up our chart a little bit. So I want you guys to go ahead, pause the video, copy these down. We're going to change our candlestick colors. If you want, you guys can use whatever color you want. Right now, they're going to be red and green. Mine are blue and black. Blue for the up candle, black for the down candle. Don't worry, I'm going to explain what the candlesticks mean later in this video. But just for right now, go ahead and copy those colors down. And then I'm going to click through all these. On the canvas, we just want a solid background. Those nasty grid lines are disgusting. We want those out of the way. And that should be good for right now. All right, now that our chart colors are cleaned up, we are one step closer to being able to get into the fun stuff. So we're going to head over here to the right to our watch list. You guys are going to have a bunch of random crap over here. We're just going to delete it. So go ahead, hover over them, click the trash can if it is not one of these top 4 that I have in here. So this is the S&P 500, the NASDAQ, and then the mini version of those two. I'll explain what all of that means a little later on. But for right now, you're just going to click this plus sign, and you're going to add these top 4 symbols that I have over here. So now that we have this cleaned up over here, let's go ahead and talk about what these symbols actually mean, because these are what we are going to be trading. So the S&P 500, these are the 500 largest U.S. company stocks all combined into one index. Same with the NASDAQ, except it's only 100 of them, and it's tech stuff like Nvidia, Apple, Tesla, things like that. So what we are doing is we are purchasing a futures contract of these indexes, meaning if we purchase a buy contract, we are predicting that price on these indexes is going to move up. If we are predicting that price is going to move down, we're going to be buying a sell contract of the index. So that's the beautiful thing about this. Whether there's a green day, red day, sideways day in the market, there's still opportunities to make money. So now that we understand what we are going to be trading, and if that was a little confusing, please rewind the video, rewatch that segment. There's no shame in watching something twice. My first introduction to futures trading video, I think I watched like 4 times, and it was a 5-hour video. So go back and watch. Make sure you have each segment down before we move on to the next one. And if you're watching this in the Discord group, or if you are watching it on YouTube and you're a part of the community, feel free to ask me any questions. I'm always here to help, here to answer. Okay, now that we understand what we are going to be trading, we can go ahead and talk about these candlesticks. So if you copied my chart colors, a blue candlestick is going to be a move up in price, or if you didn't copy mine, this will be a green one. A black candlestick, or a red, is going to be a move down in price. These candlesticks have 2 parts to them. They have the candlestick body, which is this solid part right here, and then the candlestick wick, which is the line that comes out of it at the top and at the bottom. So you see this line right here at the bottom, and then there's one at the top. That is going to be the candlestick wick. So if you're taking notes, I want you to draw a little candlestick in there, and I want you to label the candlestick body and the candlestick wick. So these candlesticks represent a period of time and what price does in that period of time. We'll get into that in a second. But right now, what I want you to know, if it's a blue candle, so if it's a bullish candle, a move up, the bottom of the candlestick body is going to be where price opened. The top of the candlestick body is going to be where price closed. The wicks represent where price moved during that period of time. So right now, if you look in the top left, we're on the hourly time frame. This means that each one candle represents 1 hour in time, what price did during that hour. So on this bullish example right here, we can see that price opened at the bottom of this body at the start of the hour. Price then moved down the first part of the hour to form this wick, and then it moved back up all the way to the top of this wick during the hour, and then it closed right here where the top of this candlestick body is. So if we look at a live example, you'll see right now this candle doesn't really have a bottom wick. So what it's doing right now is it formed, it opened, and it has only pushed up, and now that it's closing back down, we can see that it's leaving that top wick right there. So that right there is a bullish example, so what our blue candlestick does during the hour. A bearish example, same concept, tiny bit different. If it's a move down, the top of the candlestick body is going to be where price opened, and the bottom is going to be where price closed. And then same thing with the wicks, just where price moved throughout that hour. And then we have the open and the close. The open and the close means like at 9. So like if this is the 1 o'clock candle, it's this is in military time, by the way. So if we look down here, it's the 1 o'clock candle. So where price opened at 1 o'clock and where price closed at 2 o'clock. And if we scale down, so say we're going to scale down to like the 5-minute time frame. So now, now these candles represent 5 minutes of time, right? So this is what price did in 5 minutes. So at 9:40 this morning, this is a rough trading day, but we had no real entry point. But what price did in this 5 minutes is it opened, it moved down a little bit, came up, closed, and this is our 5-minute time frame. So the candlestick structure is the same on all time frames. 1 minute, same. 1 hour is what we were just on. So that is the anatomy of our candlesticks. Again, make sure you're taking notes. Go back and rewatch that part of the video if it's not quite making sense. And please, please, please ask any questions if you are confused. All right, so now that you guys understand candlesticks, what they are, how they work, we're going to talk about highs and lows. So I'll show you on the chart in a second, but if you're taking notes, please write this part down. A high is a move up and then a move down. So that's how we identify a high, is a move up and a move down. So a blue candle and then a black candle, or a green candle and then a red candle. And it's going to be the highest point of those two candles, counting the wicks. So of those two candles, wherever the highest point is of those two wicks, that's what you're going to mark as the high. For a low, it's the opposite. So a move down and then a move up, going to be the lowest point of those two candles. So we look over here at the charts. What do we see? We see right here. We'll mark them with our lines. So right here, we get a move up and then a move down. Highest point of those two candles, boom, right there. That's a high. Over here, a move up and then a move down. Highest point of those two candles. Why is the high not up here? Because it starts to move down, right? It's a black and then a black. It's two move downs. It's not a high. A high has to be a move up and then a move down. So like right here, move up then a move down. Highest point of those two candles, boom, that's our high. Okay, I want you guys to pause the video, go on the charts, practice marking out 5 highs. So a move up and a move down, highest point between those two candles. Okay, so now that we know how to identify highs, and you guys practice marking those out on the chart, let's talk about lows. So a low, again, a move down and then a move up, lowest point of those two candles, right there, right here. We get a move down and then a move up, lowest point of those two candles. Boom. We go back here, boom, black and then a blue. It can be the wick of the blue candle. It's just the lowest point of those two. That's our low. So like, is this right here? These two blacks. Is this a low? No. Idiot. I really hope you didn't say yes. It's not a low, right? Because we need a black and then a blue for it to be a low. So our low would be, boom, at the bottom of that blue candle. So same thing, pause the video, go mark out 5 lows on the chart just for practice. Our tools are over here to the left. If you click on the arrow, get the different lines. I use the horizontal ray to mark my highs and lows. Okay, now that we understand highs and lows, we're going to move into what's called a fair value gap. So a fair value gap is a 3 candlestick pattern where the second candlestick will move so aggressively up or down that it creates a gap right here in the middle of untapped price between these 3 candlesticks right here. So you see how right here the bottom wick of this candlestick only goes part of the way down of this one, this second one, and then the third candlestick wick, price only goes up about, I don't know, a fourth of the way. So all of this candlestick body where price never came with the first or the third, that's our fair value gap. Boom. This is all an untapped zone of price, and we'll get into what these mean and how they work in a little bit, but for right now we're just going to work on identifying them. So this is a bearish example of a fair value gap. The candlestick colors, the first and the third, do not matter. It can be whatever. The middle one will be black for a bearish example, and it'll be blue for a bullish example. So let's find a bullish example for you guys right here. Perfect. This is actually a good one because this third candle's a down candle. So right here, look, we see this wick only gets about this high up on this second candle, and then this third candle's wick doesn't go down far enough to fill to where the wicks are touching, right? So we mark our fair value gap from this wick up to this wick. Boom. There's our bullish fair value gap, right? Bullish fair value gap. And again, we're just working on identifying them right now. So let's find a couple more. Here's a bearish fair value gap right here. Look, wick doesn't go down, and then wick doesn't come up. We got this big aggressive move down of untapped price. Boom. Bearish fair value gap. But you see how, and they can be small too. Like, look how small this one is. This is a little bullish fair value gap right here. And we'll work on figuring out which ones are valid and which ones are not. But you see how, like, if we don't have a fair value gap, right? Look, there's 2 big bearish fair value gaps. But you'll see, like, if the candlesticks move and they open and close and they kind of move side to side, we won't get those fair value gaps. Like right here, the wicks are touching, right? Here, wicks are even. Right here, there's no fair value gap. So I want you guys to do the same thing. Pause the video, go and identify 5 bullish fair value gaps and 5 bearish fair value gaps on your chart. All right, you guys, that is going to do it for episode 1. Before you move on to episode 2, I want you guys to get on the charts and get your shots up. I want you to practice identifying these highs, lows, and fair value gaps. These are things that we see in the market every single day. So these are things that I want you guys to be able to identify accurately and quickly. And in episode 2, we're going to get into some more of the fun stuff. We're going to break down the concepts that make up my strategy. And we're going to talk about how we can make this money in the markets. If you guys made it this far into the video, I really appreciate y'all watching. I hope you learned something. I hope you're getting excited. And I'll see you on the next episode. Peace.